Global stocks plunged again on Monday morning. Japan's Nikkei index led the tumble, falling close to 9% from the open before recovering some ground. Lenders were hardest hit, with the country's bank stocks index falling 17% from the open, before it too clawed back some losses. Hong Kong then opened with similar falls. Megabank HSBC plunged 15% out of the gate. Lenders have been hard hit by mounting fears of a global recession sparked by Donald Trump's sweeping tariffs. And in Taiwan, the market circuit breaker triggered after shares in tech giants TSMC and Foxconn both fell 10%. On Sunday, the US president indicated he wouldn't change course in response to huge market losses.
I don't want anything to go down, but sometimes you have to take medicine to fix something.
Trump said he wouldn't do a deal with China until the US trade deficit is sorted out, and he set tough conditions for talks with the EU.
They are coming to the table, they want to talk, but there's no talk unless they pay us a lot of money on a yearly basis.
On Monday morning, futures pointed to another bad week ahead for Wall Street. US stocks have already shed close to $6 trillion in value. Oil prices are tumbling too, amid fears a recession could cut demand. International benchmark Brent crude was down around 2% by mid-morning Monday, following a 7% decline at the end of last week. The economic fears may only deepen this week, with signs of more retaliation to come from US trading partners. The EU is widely expected to announce its response, likely to feature tariffs on US goods ranging from diamonds to dental floss. China has already set its own steep retaliatory tariffs. The turmoil has investors expecting more US rate cuts, with some betting on a move next month. However, that could be complicated by any sign that inflation is picking up due to the tariffs, with this week's US consumer prices number now very closely watched.
At around 3 a.m. at dawn, we woke up to an explosion next to us. We all got out of our tents and saw a targeting of our journalist colleague's tent. But we will continue to deliver the message and conveying the truth to the whole world. This is our humanitarian duty.
Oil slid 3% on Monday to its weakest level in 4 years. Brent futures and US West Texas Intermediate crude futures hit their lowest since April 2021. Both benchmarks have lost more than 10% over the last week. It follows a large drop in oil prices Friday as markets worry US-China trade tensions could cause a recession. They fear it could see a fall in demand for crude while OPEC Plus looks to increase supply soon. Oil prices are an important indicator for Russia's financial health. Here's Kremlin spokesperson Dmitry Peskov.
Of course, this is an indicator that is very important for us, very important for filling our budget. And of course, we are following the situation very closely, which is currently extremely turbulent, tense and emotionally overloaded.
Commodity markets, including metals, also fell. Base metal prices in China dropped, with copper on the Shanghai Futures Exchange falling 6%, hitting its lowest in more than 3 months. Gold climbed to a record peak last week, but later dropped amid a wider market sell-off. However, gold prices pared earlier losses Monday as some safe haven demand filtered through and analysts held an upbeat outlook for bullion. Investors are worried about the intensifying trade war between the US and China and its impact on demand for raw materials. Major stock indexes plunged as US President Donald Trump showed no sign of backing away from his sweeping tariff plans. Investors bet the rising risk of recession could see the Federal Reserve cut interest rates as early as May.
European Union countries will look to present a united front against U.S. President Donald Trump's tariffs, likely approving retaliatory tariffs on up to $28 billion of U.S. imports. The move, expected in the coming days, would tax a range of U.S. goods, from dental floss to diamonds. By doing so, the EU would join China and Canada in imposing retaliatory tariffs, potentially escalating a global trade war that could make goods more expensive for billions of consumers and push economies around the world into recession. The 27-nation bloc faces 25% import tariffs on steel, aluminum, and cars, and as of last week, reciprocal tariffs of 20% for almost all other goods. Trump's tariffs cover some 70% of the EU's exports to the U.S., which last year were worth a total of $585 billion. U.S. duties on copper, pharmaceuticals, semiconductors, and timber from the EU are likely still to come. The European Commission, which coordinates EU trade policy, will on Monday propose a list of U.S. products to hit with extra duties in response to Trump's steel and aluminum tariffs. But among EU members, there are differing opinions on how to respond. France has said the EU should work on a package going well beyond tariffs, with President Emmanuel Macron suggesting European companies suspend investments in the U.S. until, quote, things are clarified. Ireland, almost a third of whose exports go to the U.S., has called for a considered and measured response. And Italy, the EU's third-largest exporter to the U.S., has questioned whether the EU should hit back at all. The initial EU counter-tariffs will be put to a vote on Wednesday.